Welcome everyone. In today's video I wanted to talk about how you can use drift to create a delta neutral trading position that should generate roughly 35% APR on stablecoins. So I've made other videos on this before talking about how you can do this on Mango markets and strategies involving drift and Mango markets. So if you want to check them out, I will leave the link to those videos in the description down below. But today we'll be simply using drift, and we'll be talking about different ways for you to boost the yield that you're getting here as well. So effectively what happens is that you short sell the ETH perpetual future, and that will generate you yield. And then with other money that you also have, you will buy Ethereum spot, and that will create a delta neutral trading position. So just to show you here what I'm talking about, what happens is you're shorting $400 worth of ETH perpetual futures, and then you're long $400 worth of ETH spot, and that effectively gives you 0 ETH exposure. So in your portfolio you will have 0 exposure to ETH, but the total value should still be $800 no matter where the price of ETH goes. ETH could go up, down, sideways. It doesn't really matter because your long and your short balance each other because your long and your short position balance each other out, and then your $800 should hopefully stay a stable $800. So the value of your portfolio would be $800 plus whatever yield that you're generating here. So the funding APR is 69.5%, but we're using $800, and $400 will be on drift. The other $400 will be off of drift in a spot ETH position. So the actual yield that you're receiving is going to be 35% roughly. So you're generating 35% APR on stablecoins is effectively what you're doing. The trade that you've created is a synthetic stablecoin, and there are protocols out there coming like UXD protocol, which gives you a yield bearing stablecoin, but they won't be going for as risky of a strategy, and you won't be receiving anywhere near as much yield. So you know what, I'm going to talk to you more about how this works. So if you're not familiar with perpetual futures, essentially they're a derivatives product that allows you to get leveraged exposure to whatever the underlying asset is. So we have Sol Perps, Bitcoin Perps, ETH, Luna, Avalanche, and BNB Perps. And Drift protocol allows you to deposit stablecoins, use that as collateral, to then go ahead and buy these perpetual futures or sell them if you want to as well. And so we have here what's known as a funding APR, right? So this funding APR basically just takes the predicted funding rates and then multiplies it on like a yearly basis. So if you were to go long this ETH perp, you would be paying 68.25% of your position in order to do so. However, if you were going short the ETH perp, you are getting paid 68.22% on your position to do so. Now they have these funding APRs in place in order to ensure that the perpetual futures contract stays in line with whatever the index price is. So we can see here that the perpetual futures price is $3,919, whilst the index price of Ethereum is actually $3,913. So what it shows you here is that people are very bullish Ethereum, and that the perpetual futures price is above the index price. And so in order to encourage that price to go back down to the index price, we have the funding APRs. People who are going long the Ethereum perpetual futures might see that they're having to pay like 67, 69, 70% APR in their position to stay in that position. So they might think to themselves, you know what, it's not worth it. So they'll close their position. And when they do that, it will help the price of the perpetual future come back down to where the index price is. Additionally, it encourages people to go ahead and open up short positions, which is what we're going to do. And when you open up a short position, you're able to harvest this funding APR every hour. So if you are going to go short the ETH perpetual future, you'd get 0.00773% of your position back. I think this is every hour. Yeah, funding rate is calculated every hour. So every hour you'd get that much of your position. So we're doing this with the ETH perpetual futures today, but you can do it with the Sol perpetual futures, Bitcoin, Luna, Avalanche, BNB. But if you're going to be short selling, you want to do it when the funding APR is positive. That's when the longs pay the shorts. If the funding APR was negative, then the shorts would pay the long, and you'd have to do essentially just flip that trade. So we have Solana, so that's paying out slightly more. Bitcoin's paying out 40%. Luna 29%. So we'd want to go for either ETH or Sol. Avalanche is currently sitting at minus 44%. So what you'd want to do here, Avalanche is sitting at minus 44%, and then BNB I think also has negative funding. So essentially you're getting paid to long here, whilst the others you're getting paid to short. But in today's video, I'll be showing you how to get paid short selling. So to start executing this trade, what you're going to need to do is go to Drift and then deposit USDC. I've already done that. I've got 400 USDC in Drift right now. And we're going to go to sell, because we're going to be short selling the Ethereum perpetual futures, and then we don't have any other orders other than and so we're just going to keep it on market, because that's the only order you can have right now, because Drift is relatively new. And let's just do $400. Okay, so let's do this now. Let's press sell, and then this is just the confirmation of the order. Okay, so my position's been opened up and my entry price is at 3,921. I'm going to quickly go to Jupiter Aggregator and then buy some ETH. So I'm going to press swap here, and hopefully I should be getting a similar price. 0.102, 0.10199. So I think I bought it slightly cheaper here on Jupiter Aggregator, which is just fine with me. And so there we go. It was easy as that to set up your delta neutral trading position. And to unwind it, all you'd need to do is close this short position. So you could do it like this. Press close 100% of the position and then confirm it in your wallet. And then go ahead and sell the ETH that you have here as well. So I just wanted to quickly talk about some of the risks involved here. So you've got to pay attention to the funding APR. This isn't something that you want to set up and then walk away for like a week to come back, because these funding APRs are going to change a lot, and the amount of money that you're going to make whilst doing this is going to be quite unpredictable. I think that if you're going to execute a strategy like this, it makes sense to either automate it, or if you're working from home, then you can obviously check to make sure like how your position's going. If you are going to do this, it would make sense to check this position out like at least 3 times a day. And if you don't really have that time commitment, then it's probably not worth it for you. As well as the fact that you're going to have to make sure that you have at least 0.2% profits when you're going to exit this position. Otherwise, you're going to come out with a loss due to fees that you pay. You can do this strategy on other places like Mango Markets. They have different funding rates because the mechanism for how Mango Markets actually does trades is different. They use an order book versus Drift's virtual automatic market maker. So I tend to think that most of the time their funding APRs are going to be flipped, and there are different strategies that you can execute there. So I've got videos linked in the description down below if you wanted to check them out. And so I'm just going to give you a little tip in case you did want to do this and you wanted to increase the APRs that you were getting. So say with my Ethereum, for example, I could then take that Ethereum and deposit it into somewhere like Frankium Lending. So here I can get an additional like 4.82% on my Ethereum here. There are other money markets out here that give you yield in your Ethereum as well as Tulip. You can go ahead and check that out and see the yields that you could get when lending there. So thank you for watching. I hope you enjoyed this video, and make sure to subscribe for more videos like this one.